morning, traders. Welcome to the TMT stock market strategy video for Tuesday, August 16th. All right, we had some new intraday highs yet again. Every day the markets are making new highs on very, very low volume. Again, to be expected because of the summer doldrums. We're in the late August session of trading, so it's to be expected. But you have to treat this rally as suspect only because no volume, extremely light participation as far as market participants are concerned. And when you get a grind higher like this and virtually no pullback, we've had a month and a half rally and literally a gap up every day from the Brexit lows and then sideways consolidation for 16 days. Not saying that is not bullish price action. It is, but if it was more during the busy time of the year, I would suspect that and treat that more with respect as far as the market rally is concerned. Right now, I want to see markets pull back a little bit. They need a breather and then go higher, which I have no problem with. But when the market goes up from the Brexit lows, then goes sideways, and then goes straight up again, to me, that's a concern. My big concern is two factors here is going to be the VIX, which is in front of you, and of course the transportation sector. We'll see. Obviously, there's going to need to be a catalyst for any type of markets to either move higher or lower. In this case, move lower, and we'll see what happens in the coming days. We have a lot of data coming out this morning, and we'll take it one day at a time, guys. Right now, the markets are bullish until proven guilty, if you will. And we're just going to, again, take it one step at a time. It's very, very boring trade at the moment. So, again, if you're not doing much, step aside, let the markets come to you. And if you have some sort of a plan, a trading plan, use it. Make sure you adhere to it. Just because it's slow, don't go off kilter on your trading plan because stick to what's working for you right now. All right, VIX. Bollinger Bands, as you can see here, we've been talking about this positive divergence, very, very tight. I haven't seen something like this in a very long time. We had a doji candlestick here, indecision candle, and again, we're just sitting sideways here for about 5 or 6 trading days at the lows of the year. When this happens, you have to be careful. You have to use caution because things could really start to heat up here. GDX, let's take a look at it. And again, guys, this is going to be very quick because there's really nothing happening. There's no change in direction here. GDX, still looking for a 38% retracement at 27, and then ultimately that 25 and a quarter area here. To me, that's going to be a good area to start looking for some buy entries. Until that happens, I stay away from the long side. I wouldn't really short it unless we break below the 20-day moving average, which is 30.50. Okay, 30.50, then it'll get us to the proprietary price channel, and then below that would get us to 38%. But I wouldn't short that generally. Would not short it at the moment, only because it's very well supportive. And like I said before, gold does not trade like this for no reason. Okay, Gld the Gold Etf. I'm looking for let's talk about gold, the GC contract. I'm looking for a 13.10 print. And that's where that would entice me to look to buy. But I would still wait a little bit and see if we can create some sort of a base down at that area. If we even get down that far. If we do, then that would be a good launching pad. If not, if we break 1300, you're probably looking at 1260 to 1270-ish in the GC contract. GLD, 38%, 125. And then ultimately down here around 120 to 121. That's that double top formation that I put out here. So 120 to 121.5 would be the second target if we take out the 38% retracement. You can see that markets are starting to roll over here, MACD and RSI. Next is going to be the TLT. And you can see here we're making lower lows and lower highs. We did print that. I'd like to see it get up a little bit more around 141, but if we take out this neckline of 137, I think you get a good flush to around 134, which comes out, that's a 38% retracement. And then we would look to reevaluate it. And if that gets breached, then obviously the 200 would come into play rather quickly. And you could see here RSI and MACD just rolling over here and making lower lows and lower highs. So I would suspect that TLT starts to break down. I think you basically saw a low in rates. I think rates will continue to move higher. And yes, it'll chop around and carve a bottom. But once you take out that 160, that swing high that I showed you yesterday, then I think it's off to the races. You'll get to easy 170, 175 in the yield. All right, spiders daily. I showed this to you yesterday. We had 5 waves, right? We had 1, 2, 3, 4, and this is the 5th wave. Is this the 5th wave? When it completes, then I think that we can see some decent movement down to the 215 area, and then ultimately 210, and still would be bullish. Even if we got to 210, would still be bullish and healthy for the markets to move higher yet again. It's just crazy how they don't let the markets go down. It's just insane. 60-minute chart, you can see here, guys, we have some movement lower in the MACD and RSI. And you can see here, these are going to be your areas for support. We got a gap fill area here at 218, and then, of course, 218.44. And I just want to show you one thing here. You could see I mentioned some bearish rising wedges, and this is really what I wanted to show you. I figured let me draw it while I'm here with you guys. So we have a nice big bearish rising wedge, and you have 5 waves. 1, 2, 3, 4, 5. That's that 5th wave. And if this thing breaks, it measures back down to about 215-ish, 214.75 to 215. So again, let's see. It's only bearish when it breaks the lower trend line. So let's see what happens here. But 60-minute bearish view, bearish rising wedge on the spiders. Here's the IWM outside day. Money flew into the IWM, the Russell 2000, no question. Still lagging from its peers, from the Dow and the S&P and the Nasdaq. They all made new highs, where the IWM, our secondary leader, did not. And of course, our transports way lagging. And it's just incredible how they bid up the market when the transports, our leader here, isn't doing anything, and nobody really cares either. It's pretty funny until it needs to be known, right? Until somebody needs to know, oh, transports are really breaking down here, then everybody cares. But until the meantime, just keep buying stocks that are fairly and fully valued, which is lunacy, crazy. But anyway, it is what it is, guys. This is what we're dealt with, so this is what we need to watch. And remember, trend, stick to the trend. The trend is your friend. I know you've heard it before, but it is true. And waiting for some further confirmation that we are either going to head lower or we're going to make new highs. But I prefer a pullback, at least a pullback, before we start buying the market again, especially up at these areas. Transports, you could see here, lower lows and lower highs. Still have not taken out this swing high here at 144.50. That is an important swing high that needs to be taken out so we can actually start to move higher. And again, this is concerning to me between the transports and the VIX. This is concerning to me. Lastly is the Qs. You can see here in a large, very large and steep uptrend channel. So low volume, extremely low volume since July, and to be expected again. But guys, you know what? I'd rather see a nice pullback. Look at how far away we are to the 20-day moving average. Look at how far away we are to the proprietary price channels. Let's see what happens. We get some sort of a pullback, and then we would reevaluate it, okay? A lot of data today. Let's see if we get some sort of movement in the markets again, other than just being up. All right, guys, have a great day. Be safe out there.